Today, Wirtek published a report for the third quarter of 2022, and therefore with me here on link today I have its CEO, Michael Aaen. Welcome back.
Thank you very much, Michael.
You just released a report today. How does that feel?
It feels good. We're still growing, so that's great.
Of course. You've prepared a few slides here today to showcase some of the figures for the quarter. So without further ado, I'll hand you over the word.
Thank you very much. So for the third quarter of this year, Wirtek generated 16.5 million Danish kroner in revenue. That's a growth of 21% compared to Q3 last year. And the importance here is also that this is the first quarter this year where we have the full impact comparison of the corporate acquisition we did last year. So this 21% growth is actually pure organic growth in Wirtek. Our EBITDA for the quarter was 2 million Danish kroner, and that's a growth of 2% compared to the same period last year. We have several important projects ongoing in the organization, including implementing a new ERP system and implementing the IFRS accounting standards. So yeah, we are spending money on making sure that we are also prepared for the future here. And of course, we do also feel the impact of the very high inflation right now. The EBITDA margin for the quarter was at 12.3%. If we look at the first three quarters of the year-to-date figures for 2022, our revenue was 48.3 million Danish kroner, which is a growth of 55% compared to the first 9 months of last year. The EBITDA is 6.3 million Danish kroner, which is a growth of 56% compared to Q1 to Q3 last year. And the EBITDA margin was 13.1%. Now, as for the outlook for 2022, we are maintaining the expectations for 2022. We increased our expectations back in March, and we are maintaining those expectations, which means that our revenue is still expected to be in the range of 64 to 69 million Danish kroner, which is a growth of 41 to 52% compared to last year. EBITDA is expected to be between 8.6 and 9.6 million Danish kroner, which is a growth of 39 to 54% for the year. So these are the numbers, and back to you, Michael, for any questions you may have.
You went through it quite well. If you could just quickly summarize the quarter as it has passed us, how would such a summary look like?
Well, it's been a pretty good quarter. This is the highest quarterly revenue we've ever had in the company. And if we look at it, it's pure organic growth. And it's well within the boundaries of our Accelerate 25 Excel strategy, which says that we should have double-digit organic growth in the company. And also, if we look at the new clients, we gained 3 new clients the last 6 months, and those 3 new clients are already contributing with 9% of our monthly revenue in the company. So that's really, really great news.
Indeed, this is organic growth, and as you stated yourself, and as we could see in the report, revenue increasing by 21%, but EBITDA is more or less in line with last year's third quarter of an increase of 2%. How would you further explain the development of a higher revenue but a unchanged EBITDA?
Well, the third quarter last year was a great quarter for us. That was the first quarter where we had the full effect of the corporate acquisition. And this year, yes, we have a lot of projects ongoing. We're doing a major restructuring of our organization that we are going to get in place for the beginning of next year. We are, as I said, implementing a new IFRS system. That's a pretty big investment also. And we are right now in the middle of implementing the IFRS accounting standard. And right now we are restating the financials for 2020 and 2021. And for next year, when we come up with the annual report, of course, we're going to state that according to IFRS as well. So yeah, we do have significant investments ongoing. We also do see an impact on the inflation, like I think many companies around the world are right now, because here in Western Europe the inflation rate is at about 10%, and in Romania, where we have our operational facilities and all our people sitting, the inflation rate is right now at a 15%, and of course that does increase our costs, and it takes a little time before we can recover those costs with our clients.
There is a lot to unpack there, but I think we'll begin where you started, with a reorganization. In the report you can read about the implementation of a new ERP system. Could you tell us more of why you decided of a new system?
Well, we are getting to a size right now where we think we need to embark on a digital transformation of our organization, so that we are much better at getting up-to-date information as we go along here, and be able to drill down into the numbers, down to the business units, into the actual client teams, and even down to individuals in the teams there. So we are looking at using the data much more in our business, in order to make sure that we really become more efficient as an organization.
Another thing you mentioned was the inflation, of course, and it is a common theme amongst many of the companies that are reporting this quarter. I'm curious though, you say that it's challenging the job markets in the report. Is this more prevalent in Denmark than, say, Romania, and is it more prevalent in already existing colleagues or new prospective colleagues?
Well, I think the crunch in the IT job market is pretty much a global challenge at the moment here. We know we are approaching a recession, so maybe things will start easing up as we get into next year. But right now, yes, it is definitely more challenging than it was last year, getting new good colleagues on board, as well as retaining the ones we already have here, because we are all looking into getting the same bunch of people, talents out there in the market, so yes, it is increasing the cost level in general for the people that we need, and it also, of course, increases the cost level for the ones that we definitely want to keep also in the organization there.
What is the outlooks of increasing prices to your clients to offset this effect?
Well, we are not going to cover the salary cost for our colleagues ourselves. So, of course, that cost will eventually reach our clients, and we normally also renegotiate prices with our clients beginning of the year, and sometimes also the middle of the year. And if we have major significant changes during the year, of course, we'll also go into a dialogue with the clients here. We need to find that balance here, with our clients, in order to make sure that it ends up being a win-win situation in the long run. Because we are really collecting clients for the long run, and they've been with us on average more than 6 years, so that's really, really important for us, that we find the good way of working with our clients in that respect as well.
The last effect you mentioned that had an impact on your EBITDA was the IFRS, and I'll get to that in a moment, but I'll continue to speak on your clients now. In the report you can read that clients in Denmark now represent 50% of your revenue, and that in the last 6 months you have been able to sign 3 new clients. Could you tell us a little bit more about these clients? Are they all from Denmark?
2 of them are, and 1 is from outside of Denmark. And as I said, they're right now generating about 9% of our revenue, and especially one of these clients is growing quite fast, and it's also in a sector that we really like to work with. It's in the energy sector, making solutions for renewable energy. So that's really something that is of interest for us to develop even further in the future.
And the 1 client that wasn't from Denmark, where is that client from?
That was a UK client.
Well, to existing customers as well, you've noted an increased demand. For what sort of services?
Well, it's pretty evenly distributed across the organization. If we look at our electronic equipment services business unit there, we see a significant increase in demand from our existing clients there. So that business unit has grown quite nicely this year. but also in our software engineering services, we have multiple clients that have been growing this year. So it's pretty evenly spread across the organization as a whole.
And where do you think that effect is rooted?
Sorry, I didn't hear that.
Where do you think that effect is rooted?
Well, it's, we are seeing so much digitalization going on in the world. So I expect that is still ongoing out there. Our clients are doing quite well for most parts, and they need to develop even more, and they need our help to get them there.
We'll now talk about the IFRS because in your Accelerate 25 strategy, you're aiming to move towards the Nasdaq main market. And I can already see a question here in the chat that is curious about when you'll eventually make the move to the main market.
Well, in our updated strategy from this spring, the Accelerate 25 Excel strategy, we do promise that we will go onto the main market before the end of 2025. And implementing IFRS is a necessary step for us in order to be ready for that journey. So when we come out with our annual report for 2022 in March next year, in principle, that is one of those we can check off, but we have not, as of this moment, decided exactly when we're going to move on to the Nasdaq main market. So, well, I'll let you know when we decide on that together with everybody else.
Of course. Well, we'll also have to talk about financing, of course. You leave the quarter with a lower cash reserve than you did when you entered, and your cash flow statement represented a negative cash flow for the quarter. What are the outlooks currently for financing your activities?
Well, we don't have a cash flow problem in the company. We're doing very, very nicely in that respect, able to convert quite a bit of our operational cash flow or EBITDA into operational cash flow. So we do have, multiple of our clients may have 30-day payment terms, and if they are a little bit late with the payments, you can have some larger payments from clients coming in the day after a quarter ends, so that's something we really are not really able to project very precisely. And, as you can see from our balance sheet and cash flow statements there, that we are a company that generates so much excess cash that we actually pay out dividends to our investors. We paid out more than 2.6 million Danish kroner this year in dividends. So yes, we definitely don't have a cash flow issue in the company, and we don't foresee we need to go out and get new financing into Wirtek, unless of course we do a major acquisition where part of that financing could come from gaining cash from outside of Wirtek's own cash flow generation capabilities.
And while we are on the subject of acquisitions, you have been performing a due diligence on a company that you wanted to acquire, but recently decided not to acquire the company. What happened?
Well, as we told the market early summer, we went into a due diligence process with an acquisition candidate that we found very interesting, and we did over the summer and into the autumn. Did the very thorough due diligence there, but in the end, we decided not to go through this acquisition because we always, weigh pros and cons up against what's best for our investors. And in this particular case, we didn't feel we could reach an agreement that was in the best interest of our investors. So we decided to not go through with that acquisition.
There is a question in the chat that just came in that reads as follows. How will Q4 be affected by temporary costs?
By temporary costs?
By one cost nature, I think is the question.
Well, we have these projects that are going to be ongoing. The ERP implementation is going to also go well into next year, and the implementation of the IFRS is right now we are working on converting 2020 and 2021, restate those financial statements into IFRS. And next year we are of course also going to have costs in converting our 2022 financials into IFRS accounting standard terms. So yes, there will be costs for this also moving into next year. So I can't really tell more about that, but of course these are budgeted items.
Then we'll hope that is a satisfying answer. I have just one question remaining, in that regards looking forward. You mentioned that you carry the same outlook as you have done before. It remains unchanged, in other words. This is despite a concern of inflation. Could you tell us more why you decided to leave it unchanged?
Well, that's what we believe at this point in time. Here we are in beginning of November, and as you can see already, our revenue growth the first 9 months of the year was 55%, and we promised from 41 to 52%. So I think we are on pretty good track there. And concerning EBITDA, we are currently at 56% for the first 3 quarters of this year, and we are promising between 39 and 54%. So all in all, you know, we feel we are on track there, and if we are not, of course we'll let you know.
Then Michael Aaen, CEO at Wirtek, I wish you all the best luck and thank you very much for your time.
You're welcome.